Good afternoon, and welcome to the financial update. Let's dive into the dynamics of the overnight global markets. If we had to describe the session in one word, it would be divergent. On the surface, the S&P 500 index appeared relatively calm, closing just 0.09% lower at 710.14 points. But beneath that calm surface, anxiety was churning. The VIX index, often called the market's fear gauge, surged over 8% to 18.89. This disconnect between a stable index and rising fear tells its own story. So, what's weighing on sentiment? Two primary factors stand out. First is interest rates. The yield on the 10-year U.S. Treasury note has climbed to 4.27%, applying direct pressure on technology and growth stocks that rely on future cash flows. Second is geopolitical risk, and this is vividly reflected in the oil market. The price of WTI crude oil jumped more than 5% overnight, reaching $86.94 per barrel. Gold also edged higher, trading at $4,829.40 per ounce. The simultaneous strength in oil and gold is the market's direct vote on heightened geopolitical tensions and inflation worries. However, the market wasn't without its bright spots. Tech giants like Nvidia managed to buck the trend, rising 0.36% despite the broader pressure. This indicates that while capital is fleeing most risk assets, it's still clustering in a handful of the most resilient technology leaders. This internal divergence makes a one-sided market sell-off less likely, pointing instead toward a choppy, slightly weaker trading pattern. We assess the probability of this scenario at around 65%. Shifting our focus to capital flows, China's A-share market showed some resilience yesterday, with the Shanghai Composite Index gaining 0.76%. However, this domestically driven technical rebound faces a significant test against the backdrop of rising global risk aversion. As European markets open, the overnight spike in oil and the VIX is likely to set the tone, prompting funds to potentially flow out of Asian risk assets and into safe havens like the US dollar and government bonds. We also need to reassess the role of Bitcoin in this environment. Its price fell 0.89% overnight to around $75,130. The fact that it declined alongside tech stocks as fear rose clearly tells us that, for now, it's behaving more like a high-risk asset rather than a safe haven asset like gold. Putting it all together, the market's dominant capital themes are quite clear. Theme 1 is going long on the geopolitical risk-driven inflation trade, focusing on crude oil, gold, and related energy equities. This theme has high continuity, with a probability we estimate at 75%. Theme 2 involves hedging within the U.S. stock market itself, holding selective, dominant tech leaders while avoiding rate-sensitive, high-valuation growth stocks. The probability for this theme is around 60%. There are key inflection points to watch closely. The foremost is whether the VIX Fear Index can break above the critical 20 level. Any further escalation in Middle East tensions could trigger another surge in oil prices, potentially pushing the VIX past 20, which might activate programs selling in stock index futures and accelerate a decline. Of course, there are variables. A risk to watch is if oil prices retreat rapidly by more than 3% from their highs without any de-escalation news. That would signal the market may have overpriced the geopolitical risk, temporarily invalidating the inflation trade logic. Conversely, if the Nasdaq index opens surprisingly strong tonight and helps the S&P 500 firmly reclaim the 713-point level, it would suggest the market may have digested the negatives, potentially triggering a short-lived short-covering rally. Therefore, for traders, a hedging strategy seems prudent in this environment of unclear direction and heightened volatility. One approach could be going long the energy sector while simultaneously going short or reducing exposure to rate-sensitive broad market indices. A potential entry signal would be if, 30 minutes after the U.S. market open, the S&P 500 fails to hold above 710 and the VIX remains above 18.5. In conclusion, here is our directional outlook for the day. Overall, we see a 45% probability for a down day, a 35% chance for a choppy session, and only a 20% likelihood of gains. We anticipate the S&P 500 will likely close below 710 points. WTI crude oil should hold above $85 per barrel. And Bitcoin's price may test the $73,500 support level within the next 24 hours. In summary, caution and defense are the orders of the day as risk aversion takes center stage.